Regarde au fond que des chimistes. Pour je te peux phraser la chimie. L'agenda drogué sur Betclic. Tunnel de weed jusqu'en Belgique. Papa chinois devant le PJB. Les qu'on reçoit des colis qui sont piégés. J'envoie des strikes, pas de la VG. Ma ligne est cryptée comme le PG. On fait du sale toute l'année. La frappe d'Ali Boumaillé. Les haters sont condamnés. Coup de mortier dans le poulailler. On kick sale. La queue comme au McDrive. Bénéfice des tailles. On pousse, on dépanne.
Ta caméra fume pas trop les ganaches. Regarde au fond, regarde l'équipe. Ouais. Je tourne avec Savo comme je tourne avec AP. La plaque, soit 13 blocs. Faire qui grogne. Les mains faites pour leur on déteste le plaqué.
Alright guys, sorry about that. How to get set up. Alright, so we're going to be doing another Spartan Chats podcast episode. This is episode number 2. Hope everybody's having a fantastic weekend. It is Valentine's today. And as you can tell, I'm making a podcast, so that gives you a description of how my Valentine's is going to go today. But let's get straight into it. I got a few things I want to talk about today regarding the markets and the sort of broader sense of where we are in the markets today. Let me bring this down a little bit because I'm going over my decibel meter. Just as a sort of economic recap, we got the job openings, which were about on target at around 6.6 million. That came out on Tuesday. We had sort of CPI come out with expectations at around 0.3%. Core CPI was 0.1, nothing new there. Wholesale inventories were a little higher than expected. Interesting, federal budget came out. Federal budget was worse than expected. It was expected to see a loss of 150 billion. We got a loss of 163 billion. Initial jobless claims came out. The expectations were 760,000. We got 793,000, which I think was a revision down. So we beat, or a revision up. So I think they had an estimate, revised their estimates, and then we beat the estimates. We beat the revised estimates, so it's worse than the worst expectation. So that's a pretty big indicator of where the economy is right now. And then we had continuing jobless claims at around 4.5 million. And then consumer sentiment was a slight tick up from 79, which was the prior consumer sentiment. And then we got 80.8, so it's about a tick up of about a little over 1%, or around 1%. This week we have quite a few things coming out. So obviously Monday is going to be a holiday. Manufacturing comes out on Tuesday. We have retail sales, PPI, industrial production, cap utilization, business inventories, FOMC minutes coming out on Wednesday, initial jobless claims coming out on Thursday, as well as continuing some housing stats, business permits, import price index. That'll be an interesting number. Then we have market manufacturing PMI, and then market service PMI, and then existing home sales would be the big one coming out. I'll just take the market watch real quick to take a look at the calendar. If there's anything new that I'm missing, labor force survey comes out on Wednesday. We have retail sales along with the ECB minutes coming out on Thursday. Obviously PPI, retail sales, CPI, PMI composite, CPI, PMI composite flash, and then Baker Hughes rig count on Friday. So that's just for the week ahead. The interesting thing that I want to note about the jobless claims is that we are seeing an uptick in consumer sentiment with what appears to be worsening job performance and jobless claims performance. So there's a strange diecast and dichotomy between the two economic indicators. Um, and then just to sort of cap off the markets here, we did see new all-time highs for the S&P and the Nasdaq. Dow Jones kind of got there, failed to take out the highs, about 40 points lower to take out the highs. We saw gold throughout the week slightly move higher, but it's still below 1830. We closed at 1824.8. Above 1800, which is still strong. Silver, much stronger, closing at 27.5. We have the 10-year yield closing at 12. We hit a high of 12.02. So we are seeing 10-year yield strengthen. I think the yield curve, or the 10 over 2s, was also strengthening. We saw the dollar finally get below 95. We saw throughout the day, overnight, sort of the dollar for Thursday into Friday, rise back into 90.7, closed at 90.44. So we are seeing the dollar sort of come back and flatline here a little bit. Russell 2290, not at the all-time highs, slightly above 2300, but given the equity performance, it's very possible we see a new all-time high set in the Russell 2000 index. Oil's climbing, got very, very close to 60. It's at 59.82 at the high, closed at 59.73. Interesting thing, the VIX finally closed for the first time since this entire craze below 20. So we hit 1997 on the VIX, which is very fascinating. It's a decent sort of deceleration in volatility. TLT, so the 20-year bonds closed at 147. And then, interesting to note, lumber really stuck at that 900 level. It's at 979.4 at the close, hit a high of 991.9, very close to $1,000 per, I think, what is it, 1,000 metric cube. I don't know how they price lumber futures, but whatever it is, it's almost $1,000 per whatever the underlying is. But that's sort of where we are in the economy today. Interesting to see yields rising, equities rising, the dollar starting to pull back a little bit here. Gold, the gold on the short term looks fairly decent. Looks like it wants to get back into the 1830 levels. But this market has always been a fascination. I've been around the markets for only a few years. I'm still a young buck in this whole experiment of modern financial capital and financial economy. But it's very strange to see how the markets have acted over the past 12 months, 13 months. We're seeing this sort of craze in equity speculation. You have your AMCs, your GameStops, you have your Nokias, your all these other things that the market has just pushed irrevocably higher. Bitcoin, Tesla. Now you can have your own opinions on Bitcoin or Tesla. There's a swath of different opinions, but it's undeniable that those two names have benefited greatly from speculative action, and Tesla more so than Bitcoin, because Tesla has the ability to drive up its underlying by just sheer volume of its derivatives. That's where you get your gamma squeeze, where you just have such frequent and massive call buying in Tesla that the underlying is forced up. It's sort of the tail wagging the dogs type of scenario with Tesla, and I think you see that all over the place. That was the same thing with GameStop. It had a couple of nice spikes, and then you just saw this massive influx in call buying, and then the stock behind it just, skyrocketed. And then obviously GameStop's all the way back down. We could take a look over at GameStop, and it's a fantastic example of a parabolic move. We started out the trend popping from 15 to about $30, which is already a 100% move just in that. And then from there it flatlined in the 30s, and then it just went parabolic. It went all the way up to 513, and then curled, and then came straight back down, and now we're at 52. So it's, we're still even above the 200 day, which is insane to me. And we're still, over 100% higher than, previously. But still, it just goes to show you the craziness of the speculation and sort of the spec buying. But one thing that I wanted to note and touch on today was the this very strange thing I'm finding through my scanners. And I started out my entire trading experience in over the counter markets. So OTC was really where I got my start. So I'm very, very in tune with the happenings on the ground of the over the counter market, which is, I mean, if you want to go to the wild west, you go over to the over the counter. You can have your Redditors, your all these other things buying spec names like Neo or GameStop or whatever else they have, BlackBerry or whatever. But if you really want to get crazy, you go over or you go to the over the counter markets, and over the counter markets are genuinely a different world. They live in their own sort of bubble, I guess you could say. And one thing that I've noticed over the past really couple of weeks, not even longer than that, but just a couple of weeks, is incessant volume and completely useless over the counter names. I mean, I was looking through my scanner today, and I've got a couple of low float momentum scanners, I've got a couple beta scanners, I've got some gamma scanners, I've got some derivative focus scanners, and then I have a penny stock scanner where I have a price at set amount of volume with a set amount of shares, and a set amount and a set sort of volume move above standard 50-day volume. And the number of names popping up on this scanner is incredible. And I only recently reconfigured this scanner to pick up penny stock names, and I'll just pull it up here. And I was looking through a lot of them last night and today, just by order of volume. And let's see if I can bring it up here. So microcap unusual volume is what I call it, and it's between trip ones and 0.1. And I was looking through a lot of the names in here, and some of these names are saying 100, 300, a billion volume, trading at trip 5, trip 8, trip 3, trip 9, and then double 10s, double 11s, and all these other things. And HAON, Halitron Inc. had about 1.1 billion volume, and the price traded flat on the day with 17 million shares available. I mean, and you take it, you pull up the over the counter website where you can go take a look at all these names. Let's just, for example, take in, what was it, HAON, and it's Park, pink, no information, dark defunct. It's got a stop sign. You take a look at the security details. Nothing's updated. They have held at DTC. They have the OS, the AS at 25 billion, market cap of 16 million, which is astounding to me that it's dark defunct. There's no news. Actually, no, there is news, but it's from. Okay, sorry. The last thing on their news site was SEC litigation release back March 25th, 2020. Charged so they charged a Connecticut-based penny stock company and its CEO with making false, misleading statements in a press release as a scheme to defraud investors. That's perfect. Okay, let's look at that. So this is what HAON, and let's take a look at the chart here. HAON. The last thing that came out was that the SEC was investigating them for defrauding investors, and the stock price in the past 2 months ran from 0.0002, so a trip 2, all the way up to 0.002. So, you know, despite the fundamentals, it ran 1,000%. Essentially 1,000. It's a 900% move, but you could say take it from trip 1, which it was at 0, and then a trip 1, it was trading there to that, and that's even from a trip 1 to where it is a 2,000% move. With 1, 2, 3, 4, 5, 6, 7 candles, 8-hour candles with over a billion volume. 8, sorry, no, there's one candle back here with 2 billion volume, which isn't it's not a lot of capital. It's not a lot of genuine money being put into this name, since it's trading at 1 to 1,000th of percent. But you get that up to where it is today, from where it was at 2 to it closed at 11. That's still 500%. That's a huge move. And it's there's absolutely no reason for it, and it's only recently, and that's the thing that I've been seeing with a lot of these names. Here I'll give for example, if you have Thinkorswim, is a fantastic way to look at this. Go to your Thinkorswim and go to your stock hacker, and then I'll just build you one really really quickly and easily. So you take 3 of the following 3 filters. You have your last, your volume, and then the study. So those are 2 stocks, a stock filter, another stock filter, which is last and volume. But you put your last between trip 1 and point 1. You put your volume at a minimum of a million and a maximum of infinite. And then your study would be volume change, volume 75% greater than 50 bars ago. Very simple, very straightforward. And you get I got 620 different stocks that popped up here, and I've probably gone through 40 of these stocks, just looking at their charts, looking at what's going on, and if there's any news. I don't think I've seen one so far that's rallied on news, and all of them, every single one I've looked at, the volume started in the past 2.5 weeks. So there's just randomly, just incessant buying of completely worthless garbage companies that should be completely delisted. They're not reporting anything. They're under SEC investigation for defrauding investors, but they don't care. These people don't care who are buying these names. They're just bidding up the price, and they're making the stock go up, and then eventually they'll come down. And this is the thing I'm trying to tie back to the rest of the market, is that it's not even tying back to the rest of the market. It's tying back to the Federal Reserve, tying back to easy monetary policy and easy liquidity, where they're just dumping liquidity into the market. And like I think we made the analogy last time, it's putting Play-Doh in your hand and squeezing your hand and say, oh, I can still close my hand, I can still make a fist. Yeah, well, the Play-Doh leaked out of your hand and it's all over the place now. And that's what happened with the Fed. They have this massive amount of liquidity leaking out of the system, going in every which direction, and you're seeing it, show up at the very bottom of the tier list. I mean, these companies are the bottom of the bottom. They are the Kit Kat wrapper, your New York street in 3 a.m. with a crackhead walking around mumbling to himself, kicking it. These companies are complete garbage. they're useless. They're set up most of the time just to scam people out of a couple $1,000, and it's like a telemarketing scheme. A lot of these companies, so it's incredible to me to see these stocks are moving 3, 4, 500 2,000% in the past couple of weeks, and it's a telltale sign that there's so much euphoria and so much speculative buying, and not even cognizant speculative buying. It's not, there's no rhyme or reason to any of it. It's just buying something for the sake of buying something because somebody else is buying it, and you're in your own prisoner's dilemma where oh, maybe if I don't buy it here, somebody else is going to buy it and it's going to go up, and then I'm not going to be able to buy it at the price it's at right now. That's essentially where we are. We're not saying, okay, well, this company has a good balance sheet, they're increasing capital reserves, they've got they're reducing their debt load, they're rebuilding some of the corporate structure, they maybe brought on a new CFO, they're looking to uplist in the next couple of months. They're making a merger or acquisition coming up. They've got a good name brand. They're getting into a new store. They have a new service coming out that looks like it's going to set up, a new revenue stream. But none of that. It's none of that. It's this company is under SEC investigation a year ago for defrauding investors, and it's up 500%. That's where we are. That's exactly what's happening right now, and you have to be able to look at this and go, okay, if I'm an investor, if I'm a trader, if I'm somebody who's involved in the equity markets, if I'm somebody who's involved in the market, and I'm looking to make a reasonable investment, and with in a stock or a company that's got some serious and some real value, and I think it has potential to move 30, 40% over the next 5 years, possibly 50% of the next 5 years. Yeah, there's nobody who's doing that. And if you are doing that, you're not making money. Because anybody who's looking at a company that says, oh, down the line, it's going to might possibly do a lot better, unless you're part of the, insane retail speculative buying and you're an investor, traders are doing fine. I think most traders are doing okay because, I can look at, I traded GameStop. I was in and out in 13 minutes, I believe. And that's the longest I'm ever going to touch GameStop. I bought some calls, went up, sold the calls, said, okay, that's, free cash, whatever, goodbye. Because I'm not going to get my, hand into the cookie jar and then get stuck when, you get fat enough that your hand just won't come out again. So that's sort of a lot of what's happening, is that these people are just getting so fat and eating so many cookies, their hands get stuck in the cookie jar. And then, they can't eat any more cookies and they starve to death and then they die. So that's kind of where we are right now. But, I just wanted to talk about just some of these, there's so many things going on. And for example, one of these, and this is all about, sort of where the market is today. You have your Healthier Choices Management Corporation trading at 0.0004 of a dollar, whatever, 0.00425, with 26 billion shares traded on Friday. It's crazy. It's just absolutely crazy. It makes no sense. I mean, HCMC, and the stock was down 14%, but HCMC, let's take a look at this one. So it went from 0 and 111 to 0.0065 on an average of 20 billion shares per 8-hour candle. It's unbelievable. It's unbelievable, and positive, and maybe this one is better, and maybe this one has, some decent news. Okay, there we go. HMC announces the sale of 5 million of preferred stock converted to common stock, initially at 100% premium to company's most recent closing price. So this came out on the February 8th. So they do PPE and all this other garbage. And they just diluted $5 million worth of common stock, and the stock ran. And so they came out at 150% premium. So it's we're just in this sort of weird, strange time when anybody's buying anything because they heard somebody else is buying it and they're just gonna buy it. So that's exactly where we are right now, and it makes no sense at all, and it's just it's pure insanity. And I think and the point I'm trying to make with all of this, talking about the penny stocks, talking about the crazy volume and the crazy spec buying, and you know dark defunct names, and some of the stocks I was looking at have caveat emptor. And if you don't know what a caveat emptor is, I'll pull up the description from OTC Market just to make sure you understand. Oh, what? I don't know why they just did this. Okay, I don't know why. So, okay. Yeah, here's the OTC Market description for a caveat emptor. And I saw about 3 of these, which were trading over 100 million shares. So typically a caveat emptor comes out for, a warning signal to investors for either promotion, where it says security is subject of stock promotion, so a pump and dump, investigation of fraud or other criminal activities, a suspension or a halt, undisclosed corporate action, so it could be reverse merger, stock split, name change without adequate current information being publicly available, or any other public interest concern. So it's essentially just a massive warning sign that, they slap onto a stock. And typically, OTC Markets has this way of discerning warning signs to investors. If there's a problem, initially they slap a yield sign on the stock. If it gets worse, they slap a stop sign on the stock and then say dark or defunct with a warning sign underneath the stop sign or the yield sign. And then if it gets real bad, they'll put on top of all of that a caveat emptor saying this is straight garbage. There's something wrong here. And I'm seeing most of the penny stocks that I'm seeing right now all have mostly stop signs, which is a good warning sign that, there's nothing going on here and that there's something, suspicious. But, back in the day when I was trading penny stocks, a lot of them came out of stop signs. They get the company moving again, they get the stop sign removed, and it's up and running. And, the stock price gets a nice bump. But that's rare. It's very rare to see that. But yeah, it's the health of this market is not there. I think it's becoming a very distraught and sort of just unhealthy, speculative market. And one of the things that I noticed, say we're talking about Tesla, Tesla's been running in essentially another parabolic scenario type move, and the thing is, I would be remiss to say it's possible to see Tesla continue to rise substantially. They could still have a substantial move on the upside for Tesla. It's very possible we see that. And, it could bring it to 900, it could bring it to 1,000, it could bring it anywhere. The S&P could go to 4,000, 4,500, Dow could go to 35,000, NASDAQ could go to 15,000, Russell could go to 2,500, whatever. Doesn't matter. It really doesn't matter at this point. We're just seeing, craziness going on. And, the reason this is all a big problem is because, you look at all these different factors. You look at your factors of, speculative buying from retail investors, and the biggest telltale sign that you're in a bubble it should be the fact that there are retail investors doing extraordinarily well. your lowest rung, on the food chain, who don't know anything about how the market functions, but you got enough of them where it doesn't matter, and you can have enough people who are, and it works to their advantage that they don't know what they're doing, because if you're a retail investor buying GameStop at $200, you know you have no real concept of, oh, this is a worthless stock. Its value is exceedingly below where the stock price is, and I'm not going to buy it because the volatility risk is too high, and it makes no sense to buy it here. There's no real reason for it to go, and if you think about it objectively, and you take into account all the different factors of GameStop as a corporation, as a company, you might be hesitant. But these people, these individual retail investors, and I strain to say investor, because they're not. They're purchasers, they're consumers of the stock market, and they don't care. So they just they toss out a market order, let alone even a limit order, and they just buy the stock in hopes somebody else will buy it along with them, and the stock price will continue rising, and and that's how their game is played, where they just keep buying and buying and buying on market, and the stock price keeps going and going and going until you hit a peak and it reverses and it all comes crashing down. But it works to your advantage when you don't understand anything about anything. So you do make a buy. You buy it. You buy GameStop for $150. You toss your entire stimmy check into it. You buy about 10 shares at $100. And it's $1,000 in, and goes up to 300. And you sell and you make a nice profit. You tripled your cash and you're good to go. And it's it helps you out because you don't know anything, because you just bought it and somebody else bought it who knows as little or less than you do, and just went up. And I think the best way to really pull all that together is the fact that there was this video from TikTok I saw on Twitter. I don't have a TikTok. I refuse to use that, as you just whatever, many reasons why I don't use TikTok. Or Instagram, for that matter. I mean, I'm not on really much, so I'm on Twitter reluctantly, just because Twitter is the only platform. But there was this gal who made a video in her car, and apparently she was one of these Robin Hooders who knew about as much about the stock market as I know about quantum theory. And she starts out by saying, I've been getting a lot of, questions about, the stock market, and, how the stock market works. And, I own a few stocks, so I think I'm in a good position to I kind of know what the stock market's all about. I know what it is. So which is fantastic logic, saying, you bought something, so you know everything about the entire, the atmosphere. So if I go out and buy, if I go out and buy a car, it doesn't make me a goddamn mechanic. I'm not gonna buy a car and then instantly go apply for a car mod shop and boosting people's cars and fixing it. It doesn't work like that. You can buy, you can come in, you can buy some GameStop, and it doesn't make you a fucking pro trader with 20 years experience. It doesn't work like that. But that's how these people think, because they're, I mean, I won't paint them all in a broad brush. I think there are some intelligent people who are paying attention to everything that's going on. They know their risk limits. They know how to trade. They know how to invest. They understand the game they're playing, and they're utilizing the masses to make good profits. And I did the same thing. I did the same thing with GameStop and Nokia and AMC. I've done it with all of them because it's easy. It's really easy to play these people. I mean, you really just, if you immerse yourself in what they're doing, you get on Reddit, you get in some of their Discord chats, and once you see them all sort of flock to one side, you just go, okay, well, it looks like this stock's going to get pumped up. You put in some short-term call options with a tight stop. You get in, you watch it, you watch the the masses come flooding in, as they start to do that, you sell off your contracts and move on to the next one. I mean, it's really, really, really easy to sort of game their own game. And so back to what she was saying, and back to the video that I saw, and I might have mentioned this one, but it was such a big realization for me that this is a lot. I'm not going to say a majority. I'm not going to, assume a lot of these people, but also you have to, understand these are Americans. We're not known to be the smartest people on earth, but that's, again, besides the point. But it just shows, okay, let's get to the video. I keep going on tirades here. But she said, I have an understanding of the stock market. I think I have a good position to speak about what's going on. And she was talking about GameStop. She was talking about what was going on in GameStop, and she was trying to explain it, and I get it, and I get people trying to understand what happened to GameStop. What happened in GameStop was actually very complex. It was a very, very complex thing. People want to say it's, we'll talk about that after I get through this, but it was a very, very complex scenario, and it took me a while to understand it. But she says, she starts out with the podcast and says, or she starts out with the video and says, so there's a lot of people, and I'm paraphrasing here, so give me some slack. There's a lot of people, a lot of really wealthy people out there with hedges around their homes. Yes, you did hear me correctly, and I promise you that's what she meant in the video. I promise you that's what she meant in the video. She said they have hedges around their homes, as in the leafy fixture from Mother Nature that you put around your house that you have somebody come shave off and shape into a nice, bush. A bush. She's talking about a bush, a hedge. She confused what a hedge. I mean, there's and it's the tricky thing about economics and about the market is that hedge. What would you assume a hedge is? A hedge can go in any direction, but typically your hedge would be, say, you have 40% long equity. You want to hedge it. Buy some bonds. You maybe go along some leaps and VIX contracts. That's your hedge. You hedge some of your people watching this podcast or listening to this podcast understand that you guys aren't dumb. You come all the way to the rungs of the earth to listen to this podcast. I'm assuming you're not, completely, idiotic people. But she starts out the podcast, and I don't even need to go further than that. I don't need to explain it much more than just going to that point there, because she says, I can't even remember the rest of the video, but that's the part that stuck with me, is that she said people have hedges around their homes, and that's it's incredible. It's incredible that these people, and they're making money doing this. And this should be a huge tell to where we are today, where you can have, individuals coming out making TikToks in their cars, having, a frantic attempt at explaining what's happening in GameStop, starting out your conversation by saying you have a hedge. And it's not just her making the video. I'm more curious to however many, probably a million people who watched that video, who actually watched it and were convinced that that's what happened. There has to be at least one person on this planet who watched that video of this young lady in her car trying to explain what happened at GameStop, talking about, wealthy people having hedges outside of their homes, and going, yes, okay. Now I get it. There has to be at least one person that thought that. There has to be. And that's what is worrying. Because these people are utilizing this new medium, this new, social media to, throw out insanely idiotic garbage that's dangerous. It's dangerous in the fact that you can, if you can convince somebody that people with hedges around their homes are manipulating your stock, and so thus you buy it, it's almost like it's telling to me that you could probably convince some of these people to buy I don't know. I got a bridge in Brooklyn to sell you, or so, it's it's ridiculous. But I got a sneeze coming on. Sorry, I gotta wait this one out here. I don't want to sneeze into my microphone or on the podcast, but I might have to. But that's just I just want to get that out of my system because it's insane to me. It's insane to me that this is where the market is. And if that doesn't tell you we're in this, maniac or sort of this mania euphoric, you know, massively leveraged bubble in the markets, I don't know what else will. I don't know what can convince you that we're in a bigger bubble than what's happened in the past month. If what's happened in the past month hasn't convinced you that there's an exorbitant amount of excess liquidity and excess speculation and excess just complete and sheer nonsense, I don't know what to tell you. And that doesn't mean the markets are gonna tank tomorrow or tank on Tuesday. That doesn't mean that on Tuesday we're gonna open up down 10% and hit the circuit breakers immediately and everything's gonna. No, what I'm saying is it's so insane, and it's all being fueled by the central banks. It's all being fueled by central banks, and it's being fueled by moronic Western governments that have no idea what they're doing. It's a swath of things, and a compilation of bad policy on top of bad policy on top of terrible people doing terrible things to their populations. It's a mix of everything. It's a mix of the lockdowns mixed with economic restrictions mixed with ridiculous monetary policy on top of even more ridiculous fiscal policy. I mean, none of it makes any sense. I mean, if you really, if you have to break out of your political bubble first to be able to see what's happening globally. You can't be in tune with the political sphere if you want to see the craziness that's going on. Because, I know plenty of people who are stuck on one side of the political bubble and the other side of the political bubble. And it's, the conversations I have or I listen to, because it's, I can't even communicate with these people sometimes. It's just, the bubbles have them so entrapped and entranced in their own world of, what's happening, that it's impossible to get through to them. It's impossible to do it. And no matter where you come from, if you're on the Trump side, if you're on the Biden side, if you're far left, far right, middle left, middle, I mean, no matter where you put yourself on the spectrum, you're in the bubble. The bubble encompasses your end and your side of the problem. And there's so much of the world that's being missed by so many people because they're stuck. But that's to say, I think that helps also fuel the problem of this bubble. And I'm not referencing political bubbles or anything. I'm just talking about the mania and speculative bubble that we're in, because it's fueled by people who are stuck in this paradigm of one-sided thinking, and then this one-sided thinking translate into one-sided action, and one-sided action leads to buying GameStop for $500 a share, even though nominal value is worth like $10. So it's insane. It's ridiculous. But I'm 45 minutes in and I haven't talked about anything. So I'm so sorry for anybody who listens to this all the way through. I'm sure you're just sitting there going, what the fuck is this guy talking about? This dude's a fucking moron. But all of this is to just say, we're in a very strange time. We're being led by very strange people, and, economies that are built on very strange premises. And the worst part of all of this is that I don't know where it ends. Grant Williams has a fantastic podcast where he has a series called The End Game. And he had Mike Green on there. And I'm going to paraphrase what Mike Green said, but Mike Green, I mean, if you're not, adamantly following Mike Green and everything he says and does, you're missing a whole heck of a lot of insight and knowledge and understanding of this market and this economy and this global system. I mean, he's a absolutely brilliant individual. And he said, the end game is, the real end game is when you die. And yes, that's he's 100% spot on. It's, the game is never the end until you're no longer participating in the game, and that's when you die. But it's all about between you have your now, and then your then. You have your now and your then, and what does the journey between now and then look like, and what is then? What comes? What comes next? Where's everything going? And it's almost impossible to know where things are going. It's pretty much impossible to know where things are going. And but there, you have to be able to seek out information that contrasts. I mean, if you really want to know the world you're in, and the journey and the path that it's going, you have to be willing to break out of your sort of bubble of specific information. And this isn't just about politics. This is about everything. It's about economics, it's about finance, it's about education, it is about politics. There's a big thing about politics. It's about foreign politics, global macro. I mean, everything has its own bubble. And it's fine. Bubbles are fine, but if you want to succeed within that, if you want to succeed within the system, you have to be willing and able to not get yourself caught in a specific bubble. You can't just listen to one side of one argument in one realm of reality, and then base your entire worldview on that. No, I mean, for example, I'll just kind of give you the rundown of some of the sources I like to listen to, just on economics. Let's start with economics, because there's a lot more that podcasts and stuff like that. But I'll listen to Grant Williams' podcast, which is very, 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 very diverse, and Peter Schiff. I love Peter Schiff. He's got a fantastic view on things. And I'll also listen to Raul Paul from Real Vision. I mean, Peter Schiff and Raul are two completely different people, especially on the Bitcoin debate. Peter's a uber bear on Bitcoin. Raul's an uber bull. You have to be able to listen to both their arguments. You have to be able to listen to both of them, or else you're going to be so lost, and you're going to have no idea what's going on. Real Vision, and just in general, I always recommend people go to and watch and read Real Vision stuff. I mean, it's phenomenal. I've been an avid follower for a couple of years, and it's made me a highly intelligent person in my own mind, but on various subjects, and I just love it. It's fantastic information. But also George Gammon. I listen to a lot of Austrians, which is that's my own bubble, but I think I've been able to dissect the criticisms of the Keynesian system. I've read a few books on it. I understand the Keynesian system, and I don't like it. But we have George Gammon, Peter Schiff, Raul Paul, Ed Harrison, Danielle DiMartino Booth. She's fantastic. Lynn Alden is... I think Lynn Alden is second to none. She's one of the best out there. Lynn Alden, please go follow and find Lynn Alden. She's fantastic. You have Brett Johnson from Santiago Capital, who's also a complete contrast to Peter Schiff. You've got on a trading sphere, you've got shadow traders, which are great. You have your 13 market moves. Those guys, Leonardo over at 13 Market Moves, I love him. He's made me some crazy money over the past couple of years. He's fantastic. Who else do we have? I just have to go through like my Twitter if I really want to figure out everybody there's so many different voices that I just have to listen to all the time. Also, by the way, if you are on Twitter, go follow Ignatius J. Riley. His thing is you're all dunces. You're all dunces. Please, be very helpful to me if you go follow him. I listen to Del Bigtree. Del Bigtree's fantastic. He has a great insight, especially around COVID. Grant Williams, Robert F. Kennedy Jr. He's great. There's Michael Knowles on there. Christophe Barraud, French chief economist, fantastic. Whitney Webb is fantastic. Beth Stanton, great. Who else we got? There's so many people in here. Like I said, Danielle. There's Peter Schiff, as always. Lynn Alden. Michael Burry is actually fantastic. He's pretty funny to follow. I always say just go follow Michael Burry. He's pretty awesome. Quoth the Raven. So he's great. He's fantastic. Quoth the Raven. Will Mead. If you follow my Twitter, you know about Will Mead. What are some other big ones? Kyle Bass is a great one. Kyle Bass is fantastic to go listen to. He's got a great insight into his focus is China. He's the manager over at Heyman Capital. Wow, that's really, I should be following a lot more people on here. Interesting. But yeah, it's the thing is you have to really diversify your understanding of things. It's incumbent upon yourselves to really go out there and not just seek information, but seek conflicting information. Find one side of the coin, find the other side of the coin, listen to both sides of it objectively. Don't make up your mind so early and so fast. Listen to the arguments, listen to the other arguments, continue listening to both sides, and then come up with your conclusion later on. You don't have to be conclusive on something immediately. That's just bad thought process. But yeah, we've been going for like 50 something minutes, so I'll wrap it up here. I think I had a market wrap up. I don't know if it loaded. We'll have to see. I'll either load it up today or tomorrow and post it before the open on Tuesday. I don't know if futures open up on Monday evening, so we'll have to see. But I will come out with either another podcast or another market wrap up. I don't really think the market wrap up is going to be necessary, so we might just have another podcast before Tuesday's video, and we'll get into. I don't even know what I want to get into. Maybe we'll go into sort of the role of passive investing, or you can go into the role of commodity prices and whatever else is going on. But there's a lot of information. There's a lot of things I wanted to touch on. I was just getting garbage off my chest today, and then we'll come back with a more in-depth podcast for the next time. So as always, I appreciate it. I appreciate you guys listening, viewing, whatever. As always, be safe out there.